Hey YouTube, this is the Robinhood investor. Hope you had a great week of trading. As always, I really appreciate your support. So if you like this video, give it a thumbs up. And if you want to learn about investing, subscribe to the channel. Today I'm going to talk about Nvidia stock, which reported earnings past week. Ticker symbol NVDA. So Nvidia is a GPU company, currently priced at $507 per share. Past year up 201%. Past 5 years up 2,058%. Scrolling down a bit, you can see that this makes up 6.17% of portfolio, or $18,260. I'm currently up 171% on this position. So the market cap is $313 billion. P ratio is 93, and dividend yield is 0.13%. Scrolling down a bit, you can see 80% of the analysts give it a buy rating. And for earnings report, you can see it's actual EPS of $218 per share versus expected $1.97. So it definitely beat EPS. So you can see that Nvidia, they design, manufacture graphics processors, chipsets, and related multimedia software. So it's in the GPU space. Taking a look at the actual earnings report, you can see it's a leading accelerated computing platform. And a lot of the top supercomputers are using Nvidia's chips. So you can see it right here. It powers 136 of the top 500 supercomputers and boasts 1.6 million developers. So a lot of developers supporting their platform. And Nvidia at a glance, you can see it's one of the computing pioneers. Started by Jensen Huang, the current CEO. IPO'd in 2012 on NASDAQ. 2001 Xbox win, and the fastest semiconductor company to reach $1 billion in sales. They unveiled the CUDA architecture in 2006 and had the conference in 2009. And 2016, they introduced first products for AI and autonomous driving, which are huge drivers for growth. In terms of recognitions, you can see Harvard Business Review, the CEO 100, Fortune's Best Places to Work, MIT's Text Review, 50 Smartest Companies, one of the world's most admired companies, just 100 Best Corporate Citizens on Forbes and Fortune, and Sustainability Index. They're featured on that for Dow Jones. For revenue by market platform, you can see it's steadily increasing year over year from 2016 all the way to 2019. FY20, it's at $10.9 billion. And we still have a couple months left in the year. So hopefully it'll beat and have a growth year over year. And their main services are gaming, data center, pro visualization, autonomous vehicles, and OEM. Scrolling down a bit, growth drivers include gaming, AI, AR/VR, which is augmented and virtual reality, self-driving cars. So the core business, you can see fiscal year 20 revenue 5.52 billion, 3-year CAGR of 11%. They have a strong market position, multiple secular growth drivers, leader in deep learning, AI, leader in HPC. So 5 of the top 10 and 136 of the top 500 fastest computers. Multiple secular growth drivers. They have 90+ market share in graphics for workstations, diversified end markets, and they have a strong ecosystem. Current revenue driven largely by infotainment. Future growth expected to be driven largely by autonomous vehicle solution offering full hardware and software stack. So you can see it's also a very strong and profitable company. Fiscal year 16 versus 20, you can see gaming decreased in share, but their data center increased in their overall revenue stream. So data center is high growth potential. And as I mentioned, fiscal year 20, slightly lower than last year, but we still have a couple months left, so it'll hopefully beat year over year. Very sustainable profitability, See revenue, gross margin is at 63%, operating margin is at 34%. So very profitable company. And why accelerated computing? And this is in the post-Moore's law era. So you can see GPU performance continues to grow steadily versus CPU performance is plateauing ever since 2010. And it continues to be a world leader in accelerated computing, from gaming, data center, professional visualization, auto. So for gaming, you can see the revenue, 56% growth year over year. Number one in PC gaming, with more than 3 times the revenue of the major GPU vendor, expanding the market with gaming laptops and cloud gaming, empowering the Nintendo Switch console. So a lot of good highlights going for the gaming. 200 plus million gamers on GeForce. And for data center, which is one of the largest growth drivers, 43% year over year growth. Registered Nvidia developers, you can see it's over 1.5 million in 2020. Every major cloud provider is on this, including Amazon Web Services, Microsoft Azure, Google, Alibaba, Baidu Cloud, IBM Cloud, Tencent Cloud, Oracle Cloud. So a lot of major cloud providers are using Nvidia. And the share of new top 500 systems, you can see it's steadily growing year over year. Number 1 and number 2 supercomputers worldwide, number 1 in Europe, number 1 in Japan. So 90+% share of accelerators in supercomputing. Now for professional visualization, which is on workstation graphics, this is also steadily increasing in revenue year over year. And they have 40+ applications unlocking new markets, 40 million designers and creatives using them. Now for autonomous vehicles, which is mainly for infotainment and autonomous driving, you can see it's also growing steadily year over year, 22% CAGR. NVIDIA Drive partners. Look at this, strong partnerships. You can see Toyota, Mercedes-Benz, Volvo, Didi, which is in China, Komatsu, ZF, Xpeng, and Single Auto. So they're in a domestic and international markets. Large and diverse customer base. You can see hundreds of millions end users through hundreds of customers. You can see auto includes Audi, BMW, Mercedes-Benz, Honda, Toyota, Volvo. A lot of creatives and also enterprise users. And cloud, you can see every major cloud provider and gaming. Scrolling down a bit, taking a look at the financials, you can see gaming, 18% CAGR, pro visualization, 13%. Data center, which is the largest growth, is 72% CAGR from 2016 to 2020, and auto is 22%. So all 4 services, business segments grew double digits, which is very impressive for this size. So earnings before interest, tax, depreciation, and amortization, this is non-GAAP. You can see it's 4.1 billion compared to last year, 4.6. We still have a couple months left in the year, so hopefully it'll beat year over year. Operating cash flow is 4.7 billion, which is better than last. Cash balance is also very solid at almost $10.9 billion. They have a very conservative financial policy. So you can see revenue, 10.92 billion, adjusted EBITDA, 4.1 billion, free cash flow, 4.27 billion, cash and cash equivalents, which is good to have during not so good times, 10.9 billion. And they have a commitment to maintaining historically modest leverage, consistent with investment grade and credit ratings, disciplined capital return policy, solid balance sheet with substantial liquidity and positive net cash position, and disciplined approach to mergers and acquisition. So those are the financials overall. Taking a look at Nvidia, you can see year over year from 2017, it was steadily increasing. 2020 took a slight dip, but we haven't finished the year yet. In terms of quarter, you can see Q3 20 was a lot better than previous quarters. And for analyst ratings, you can see it's a solid buy rating. Currently, it's priced at $507 per share, but average price target is $514 per share. Taking a look at the key stats. So market cap is $312 billion. Trailing PE, which is looking at the past 12 months, is 93. Forward PE is 47. Price to earnings growth ratio is 3.14, which is a bit high, but I think it's justified considering that they're a very high growth potential company. Taking a look at the 52-week change, it's 260%, which is a lot better than the S&P 500. 52-week change. Scrolling down a bit, so you can see dividends, trailing. It's actually the same. Dividends, they haven't increased it. Profitability is very profitable, 25.93% for profit margin, operating margin of 28.56%, management effectiveness at 11.67% for return on assets, 27.94% for return on equity. So quarterly revenue growth year over year is 49.9%, gross profit of $6.7 billion, quarterly earnings growth is 12.7%, cash position of $10.98 billion, cash per share is 17.8. Total debt to equity is 55, so for every dollar equity they have $55 in debt. Operating cash flow is $5.58 billion, and lever free cash flow is $3.67 billion. So overall, Nvidia is a very, very high growth company, highly profitable, a lot of growth drivers for all their business segments, from their data centers to autonomous driving to cloud. I think Nvidia has a lot of potential growth, also in supercomputers, and relative to other GPU makers like AMD, I think Nvidia has the larger market share and will continue to grow in the world where we need more processing, high processing computing, and Nvidia is a good long-term growth. They also pay a dividend. It's not that high, but it's nice to have both dividend payout as well as capital appreciation. I plan to add more to this position when there's an opportunity to buy and continue to hold in the long term. That's all for this video. What are your thoughts on Nvidia? Comment down below. Remember to use my referral links below, and both of us get $20 for using personal capital or free stock for using Robinhood. If you like this video, give it a thumbs up. And if you want to learn more about investing, subscribe to this channel. See you in the next video.